What's going on, YouTube? Time for a recap. As always, let's start out on X for the calls 4 hours ago. If you watched my prior YouTube video on predicting exactly what was going to happen at the top of the market with CPI printing hot, we were going to come back down to Fibonacci levels as a ladder. It loves to step down, and these Fibonacci's after accumulating a full extension up, 423.60, 2618 on two different accounts. We said that was it. That was the top. It was coming on down. Let's look at the X here. So on the targets, as far as this morning, we were swinging short from yesterday's high push. This was the top. We called 438, pushed past a little bit, and then we're going to have continuation down. And then we called inside the fibs, right? So if you watch my YouTube video, I said it was going to walk down from the 2618 to the 1618 to the 100 fib, and then the bonus round, the golden pocket, which we always talk about here. This is the golden pocket of the daily prior all-time high candle, right? So this is what the target. We were shorting this all morning. We did actually a huge day, 12,600 plus, 13,000 with the other accounts plus on Tastyworks. So this call was made, again, pre-market for you guys yesterday on YouTube, so on and so forth. Now, as expected, we've seen that push back down. You had a little bit of the P&L from this morning. We did go a little higher than that after on a couple different shorts. And then I called yet another one for you guys, another freebie here. So entries at 200 SMA 1 minute, entry one. And then if it pushes back up, right under 431 to 430.50 is where you want to start entering in those shorts on NQ at the +2 VWAP deviation, right? So we had a recovery of regular VWAP, and we're going to push to the +2, and we need to come back down and do what? Test confirmation, right? We broke over the 10 SMA daily, which is the dashed blue line right here, daily, right? That big long dash line here. And we broke over the 200 SMA 1 minute right here in the peach level. What do they have to do once they break over something? Come back down and back test confirmation. So I posted this short play. I said, next round of shorts, adding. You got to add into the entries, add, right? And I'll show you how we added into our CPI shorts today, going from a big red to green. This is what it being so versatile with micros is adding to those positions, getting your general average good at your support resistance levels that you need to caretake, right? So let's go back into see what we did. And right after that, I said, there it is. It's your short level as I called into the +2 deviation and back to the 200 SMA 1 minute and back to the 10 SMA daily, right? Called this little micro lower high. Then we had one more before it hit the final target. Let's get into the rest. So that was another free 40 points plus on the NQ that I called two huge ones. And yesterday for you guys for nothing, we traded it live in my private group. If you want to trade with us, it's in the description. If you want to support me and the channel and you trade through Apex Funded, also link in the description. If you find some value on the YouTube and want to give back, it's much appreciated. So on the Qs right here, this is what it looks like on the intraday, where I said it was going to fly back up and short this crap back to 10 SMA daily. And that's right there, plus the 100 fib, right? So a couple instances called the bottom. So let's back out a little bit here on Qs and see where we ended up on CPI and where the long was. Because I played counter trend, because I don't trade through data, because that's just crazy. So I traded some longs right here for some really tiny wins pre-data, because I figured it'd run up just a smidge. And then once data hit, I was hoping for a little bit bigger of a pop, but inevitably we called everything correctly here. So anything under the 423.60 was short. We're going to bounce down to the 1618, as we said. That's 432.23. And then to the 100 fib. And once it breaks the 100 fib, we will go down to the golden pocket, right? Always. So when we go into the 1 minute chart, I want to show you guys exactly what I played here for the counter trend long, mega long, making over 13,000 plus today. And it was all because of this friendly little tick open. So when I say the 50 fib on that 426.38, this was the final target, and almost to the penny, we hit the Fibonacci. So I was long over the course. Let's bring this up here on TradeAbate. And you can see all my P&Ls. I always show everything always for you guys. All of our PA accounts are upwards of 12 grand, and we have 6 of them. We got like $84,000 or something like that all together on the out, 30 out coming out on this coming up request. So the 15th, not tomorrow, but the next day, we'll have the 30K out in request. As we continue to follow our rules and play accordingly to the 30% rule. We're doing very good, very consistent. This is day 29. of the apex trading. So 29 days straight 100% green, averaging anywhere between 2,000 and now 12,000 a day. So let's look at some of these trades here. So let's print it down. And MNQ is one of the bigger ones. And this is why you've seen my Fibonacci points, right? So we can match these up. And you notice where I started here and I just slowly averaged in. You always average into these movers because nothing can go in a straight line forever. They have to bounce, and you add in according to your trade plan. So the trade plan is going to be, obviously for me, you can see where those ads were exactly where the CPI dump and supports were. So that first little ad, I was looking for the 100 fib right here. This is the start of the position. And then it legged down a little bit past the 10 SMA, perfectly fine. We had POC and the first fib 78.60. I added a little bit here. Came back down to the 2618 from the algo, right? So if you didn't see that one, we had a perfect algo right here. And I'll chart this off just for you guys on YouTube to see where my ad points were. I'm going to turn this Fibonacci with the pre-market algo. I'm going to turn this to purple. And we're going to see this thing walk exactly down to 2618 and bounce. Okay. 2618, 90% chance winner. Okay. With that Fib on, it looks a little easier for you guys to follow. So the Fibonacci down to the backside of the algo. So we have the algo right here and the CPI wash. Where did I start? Well, I started right here. Long, 10 SMA, long, Fib, long, long again, 2618. These are all the big ads came in. And then I'm like, well, if it goes down one more time, I'm just going to add into the 50 because that is our final short target, right? And that's the 50 fib from the prior all-time high, which we covered in multiple prior YouTube videos, calling this top, utilizing the Fibonacci from the prior all-time high daily candle to call this top. We do this a lot. And this was the long play. I played the counter trend because, again, you don't want to trade through that CPI aggressive candle. There are rules in set. I just don't trade them. I trade the counter trend or after. We did have swings from on. That's a completely different story. I had ES swings that I had called from the top as well. They were up like 1,000, 1,200 or whatever today. But regardless, now for the trade that came, we had the Fibonacci 50 and it came back to the 100. So again, let's talk about confirmation and counter trending here, okay? So the minute chart, zoom in real close here. We came down to obviously the 50 fib. Once the 50 fib is hit, that is the end. Where does it have to retrace to? Well, in pre-market, the CPI slipped through the 100 fib, and we have Fibonacci rules, and we've been doing this for 6-7 years on these. We break through the 100 fib. Where do we go? The golden pocket, anywhere between plus minus the 50. So 61.8 to 38.20. Those are the golden pockets above and below the gold 50% Fibonacci retracement. And that's what hit pretty much to the T. But notice something else hit to the T here, another 2618 backtest. That's the one I said was walking down from the 423.60. So we had overlapping supports from two different Fibonacci structures. Okay. So once this broke through the 100, hit the 50, where does it go from there? It needs to back test confirmational highs. So I said back to the 10 SMA daily for sure, which is our dashed blue line. And the 100 fib is what's another one that I called for everybody here during this static buy all dips, and it needs to go to the 100. And both of those happened pretty well. And then I posted this next one on X. I said short this push into the +2 VWAP. It will retrace back down to the 10 SMA daily, which again you see here. Counter trend playing. Okay. And all you had to do is look at some indicators intraday for a little help, right? So I seen this hot coming up and I seen a couple different things. We broke out past the 100 EMA, the 10 SMA daily, the 200 SMA 1 minute in the peach color right there. What does that mean? The price action above has to come back down and back test. Confirmation. We are confirmational traders. So when something extends, which is the volume area high right here, we are extended over the volume area high, we start to get into extreme overbought. And then we start stacking catalyst. What's the resistance? VWAP +2. What else is a resistance? Above and extended past volume area high. RSI showing us a cook. Histogram backside of the MAC showing us crosses coming and potential downside, all stacking up the catalyst together, getting a case for the bear move. So I called this one again on Twitter before it came down, X whatever, came back down. We got the 100 EMA, 200 SMA 1 minute, 10 SMA. We back tested every single moving average we broke out over that needed to back test. So this short call again that I gave to you free on X, another solid one, right? So what's to come? Well, we have earnings after hours and a continuation metric down to further extensions, but I don't think that we're going to close too much farther than this Fibonacci box. That's the big daily box. If we have continuation through, we're going to need a little bit of sentiment from earnings, and Spotify will be on watch, D-Dog, a lot of other big stuff. If you're still confused on where that Fibonacci came from and don't watch any other videos, some of the prior all-time high candles, it's right here. This is a prior all-time high. This is 2.2. I fibbed out the body structure of this, and then we went long anything over the 100 fib to the 1618 to the 2618. After the target has been hit, you have an exponential amount of weight and resistance at not one, but two Fibonacci points, one from another prior, right? Why am I using those? Well, I'm not going to tell you. That's secret stuff and secret sauce for my premium group. So there's a reason we have these two Fibonacci's on, and there's a reason we call the exact top at 423.60 and a double overlay extension at just about 439. So with that being said, on the downside, we will have continuation potential with the earnings and the slide through March. And I called this one a month and a half ago, and I said after February 10th. That's what I said. So we're at February 13th, a couple days after, boom, boom. Now, best case scenario for continuation, nothing goes in a straight line. So if you get a couple chop days, sure. Here is the sentiment. Let's change this to here so we can see what's going on. Now, the sentiment for my gap strategies, okay? First gap tag never fills. Here's the example. I did a lot of videos on this. Check the indicators that we use. If a gap is made on the daily chart, the first time the price action above the gap comes down into the gap, it does not fill unless we're on a crazy day like a CPI or Powell and we end up with a double gap like we did today. So you see this candle right here, 12.4, pushed into the gap and it was immediately bought up. That is a very simple structure that happens all the time. So what do we look for in the current time? Well, let's go to the daily. We have a gap down, right? We have another gap right here. We have no tag on. So that's going to be my magnet. So here's gap. We have no tags. Use your eyeballs. Look to the right. Do we have a tag? Nope. So this was a first tag potential. Could have came into there, no filled, went back up, but it bought back up ahead of time. Where's the next gap? Right here. Have we seen this one yet? On the daily. Obviously not. We have a gap and go now for a trend change direction. So what's the play? Anything continuing from today and tomorrow from earnings is going to do two things. We're going to use the 10 SMA as an over under. That is our standard 10 SMA daily. After that, we are either going to see a push into the gap for a no fill and then down to gap 1, bounce, break, gap 2, no tag, bounce, and then whatever it wants to do after this, doesn't matter to me. This is the end of my short at 414 for the Qs. That percentage-wise, coming from this gap, from the high, is about 5%. I'm going to go from anywhere between 8 to 12%. So if there is a further extension, we will chase down the 50 SMA or 100, and lo and behold, we got one more of these bad boys to worry about on the gap. And that's the final gap target for me. I don't know if we're going to come back down chasing some of these. We would need an explicit news piece, black swan event, war, some kind of headline to actually start tracking down there. My assumption is 8 to 12. And if we give it the absolute extension past the 50 here, maybe it catches the 50 and comes back up from highs. That's about 8%. So my final target, I get out early. Okay. So when I'm talking 414, I'm out of most of my short swings right here. It should go 410, could go another 40 points past on ES here. And then if it wants to generally find support somewhere around 400, I'm going to go back long. And that's just general sentiment. I said after February 12th, we'll have a sentiment short. This is a normalcy, right? And then we'll have this short continue 8 to 12%. I'm going to be out around 414, maybe 410. I'll hold some stragglers. Okay. And that'll be it. And I'm going to I have a short list of certain companies for the team, but we are in those and working. Now, a gap and go strategy to the downside is the best no gap fill tag down, or just a straight continuation down and up and then down again. So we'll push down another day or two into this gap, push back up to the gap and do the roll. This is the entry you're waiting for. Okay, is the back test of the gap no fill. That is the absolute 100% best thing you could possibly do to retest that gap. If you go back on your charts and look back at how many times a gap has came into itself, right? We have a gap up and we find a first tag of price action. It never fills. It happened a lot. Well, it's back past 1 year, but let this thing calculate for a real second. I do this a lot on a couple of the other videos, but going back in time here and finding a lot of the gaps during the sell-off year here, a lot of the times, no matter what, when you press into the gap the first time on regular technical analysis, you will not fill it. So there's a structure right here that does it. You can see here's a gap, price action depleted, came back up, touch gap, did not fill, came back up, finally filled. The first gap tag never fills, okay? On a regular technical analysis. I shouldn't say never, but a lot of the time. High percent probability. You can even take stuff way back here for these gaps that were unfilled from the downside and watch the first candle that plopped into this bad boy at 358. Let's go take a peek real fast just for the last example. Lo and behold, first tag, no fill. So these are always mega reputable days that I end up to massive P&Ls on these, because this is one of my favorite strategies. Gaps and strategy number one of usually the top 5 strategies we play are gaps. And even this one here at 358 just dominated, right? It pushed up and failed, had some mega nice red scalp days, back down to support. Doesn't mean the trend is over. It just means the first algorithmic tag of the gap is super important. And I've been a gap trader for 15 plus years, it feels like. I think around 14 and a quarter, but we're right there, a decade and a half. So yeah, that's going to be my general sentiment. I'm looking for that exact trade, push to the gap fill, fall back down. I'm looking for targets 1, 2, and 3, being target 1, first gap, target 2. I'm just going to do the gaps, target 3 on the gaps. And potentially the trade setup is going to be staying under the 10, looping the first gap, potentially coming back up to here, and then doing that jam down to the 3. Nothing goes in a straight line, so you have not missed it. Don't jump in early. Wait for the confirmation. Okay? Whatever that happens to be. Either it's a slip and slide or it's a first gap tag here and it pushes back up to lower high area here and then goes for the next gap. You get the jam. Hopefully that all makes sense, and thanks for tuning in. We'll see you on the next.